Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor. Really pleased to be talking to you from New York City on this, the 25th day of February 2020. And we do like to remind you that I write a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that by going to miningstocks.com. Chen Lin's letter as well. We like to tout Chen. What is Chen buying? What is Chen selling? Go to chenpicks.com. And I want to thank all of you for listening to this show, making it one of the more popular shows of the Voice America Business Channel. And also encourage you to send along comments, whatever they may be, negative, positive, whatever. Send them along to questionsfortaylor@gmail.com, questions, the number 4, Taylor@gmail.com. We do want to thank our sponsors, because without them there would be no show. Our sponsors for this week's show: Eli Gold Royalties, Great Bear Resources, Hannon Metals, Irving Resources, Lion One Metals, Novo Resources, and Sitka Gold Corp. I've titled today's show, Coronavirus and Credit, A Perfect Storm. Alistair McLeod, Quentin Henning, and John Kaiser, my guests this week. Americans long ago stopped worrying about federal deficits because new money can be always printed, and there is no need to worry about too many dollars being printed, because the common belief is that because the U.S. owns the world's reserve currency, the entire world not only needs dollars now, but will forever need them. Those who argue this cannot see any reason why that would not continue and why there would be any change to that. But history demonstrates that no fiat currency lasts forever. Actually, the U.S. dollar has now lasted about as long as many of the other reserve currencies over the past several hundred years. Alistair McLeod will be with me in the second half of today's show to explain why he thinks the dollar's status as reserve currency could be nearing its end. Alistair believes that even before the eruption of the coronavirus, he saw before anyone saw the black swan, the coronavirus that is visiting us right now. Alistair thought that we were in some big trouble from a credit perspective in any event long before this. And I was just watching Bloomberg News before I came down here to do my show, and it seemed to be that generally the idea of most of the guests was, oh, this is a black swan. There was no problem whatsoever until the coronavirus came about. Well, that's certainly not the position of Alistair McLeod, as you'll hear in the second half of today's show. He thinks that the coronavirus is likely to trigger what was an underlying problem to start with. And we'll hear some more ideas about that, hopefully from John Kaiser in just a minute. Before we get to John, I will be talking to Quentin Henning. He'll be with me right after their first commercial break to give us an update on the exploration progress that Irving Resources is making in that very unique project, with anticipated value coming not just from the narrow high-grade veins, gold veins, but the surrounding host rock, which is used by Japanese smelters as flux. So all Irving will need to do, actually, once they start mining, if they start mining, is load the host rock containing the gold on a ship and send it to the smelters, with no need to build a mill or getting paid and getting paid for the host rock. Irving believes his chances of building a very profitable mine, one or more, in Japan are very good. And it has a couple of major mining companies like Newmont and Sumitomo working alongside of it to make this happen. So if you are at all interested in the junior mining sector, I think you won't want to miss what Quentin Henning has to say right after our first commercial break. But right now, I'm happy to tell you, you won't have to wait, because John Kaiser is with me right now. John Kaiser, he publishes Kaiser Research online, and you can go to kaiserresearch.com, Kaiser Research, that's Kaiser research.com, to catch up with John and to hopefully sign up for his newsletter. Thanks for joining me, John.
Jay, it's a pleasure to be on your show.
It's always good to have you. We should do it more often, no doubt about it. Let me ask you your thoughts about this coronavirus, because that is all the talk now, and it is certainly does seem to be a very serious issue.
The coronavirus, I think, is very destabilizing for the global economy. We already had in the last few years the America First trade war, which was a decoupling of the U.S. economy from the rest of the world, an attempt to reshore manufacturing. China right now, it's out of control. Nothing's moving. These quarantines have stopped the productive capacity. Its own businesses, their own debts are piling up. There's an implosion happening in China, which potentially threatens the Communist Party's leadership of that country. Now, we may be far away from all this, and we may be able to stop the coronavirus from getting a proper foothold here and creating an epidemic, but the economic consequences are unavoidable. The supply chains, they are still globalized. A lot of stuff is not coming to America that American companies need to make stuff. We're also going to see stuff that we normally import from China suddenly be not available, so you see price rises in the stores. That's going to make the people very unhappy. The big market is finally recognizing that the economic consequences are not going to be brief and gone by April. So we're starting to see the sell-off in the big equity markets, and all this uncertainty about what it all leads to is going to keep driving interest in gold. And I still of the view that gold's going to reprice into the $2,000 to $3,000 range simply to hedge against all this uncertainty that's now happening around the world.
Uncertainty, certainly I would expect with all of this uncertainty, not to mention the credit markets, which Alistair will be talking to us about second half of today's show, there's likely to be a lot more money printed as well, but I think you see the instability as the key factor.
Yes, and of course the sovereign bonds, they're going to keep lowering the interest rates, so we're going to get down to zero in the United States. We're already in negative yields in Europe, and all of that makes gold much more attractive. Now, there's been a huge corporate bond creation binge in the last 7 years, and those are all linked to the ability of the companies to make the underlying payments. We could see the yields of corporate bonds go through the roof as that crashes. And, the resource sector is a tiny fraction of the total asset base in the world, and it doesn't take much to funnel money into the space that I like, the resource juniors, which are leveraged to the price of gold, to have a profound impact on a space that's been in a bear market for 8 years.
No doubt about it. Well, certainly, if you can find a way to turn negatives into positives, that's what we want to try to do, and I think gold certainly offers that possibility during some rough times. And as you know as well as anyone, John, if you pick the right juniors, you can do better than just buying the bullion for sure. So you have a couple that you wanted to mention. I think Azimut is one that's a Quebec exploration company. Tell us what you like about that one.
Okay, these two companies, neither of them needs a significantly higher gold price to get into the money big time. Azimut tripled in January from 50 cents to $1.50. It's been as high as a couple bucks when it released results for the Elmer project in the James Bay lowland. And this is a new style of mineralization, more typical of the Abitibi greenstone belt type of deposits. It's high grade. It has lots of vertical extent. They've just tested a tiny footprint of it. They'll be putting out an IP survey for 2,500 meters of strike, hopefully by PDAC, where we'll see, how often does this repeat? So this is an emerging discovery in Quebec. They just attracted $6 million at a significant premium to the market from an undisclosed strategic investor. And we've already got a huge area around it staked this as juniors realize, here's the type of deposit that can work fabulously at whatever gold price we currently have. So this is a story definitely to watch, whether or not gold blasts through $2,000, as I think it will.
So icing on the cake if that happens, I suppose. But what about Galway is the other one, and that's one that I cover as well. Really like to hear what you have to say about Galway Metals.
Now, Galway Metals owns the Clarence Stream project, which was discovered around 2000 by Mac Watson's Free West Resources. Galway picked it up in 2016, paid almost $5 million for it, and it's in New Brunswick. It's got high-grade gold. Visible Gold produces flashy assays. There's about 700,000 ounces already outlined of 2 grams per ton open pittable, but it's a 65-kilometer district. They're only tested a fraction of it. There's geochem all over the place saying the whole area has gold potential. Right now they're working on a zone. It's about 2.5 kilometers long, the Jubilee to George Murphy with the Richard zone in the middle. They finally are getting serious. They have 3 rigs working right now, 25,000 meters at work, most of it dedicated to stitching together these 3 zones. They just put out some more results today, one of the highest grade holes yet. It's showing that the grade increases at depth where these quartz veins are converging. And they hope to have a maiden resource estimate for this part of the project out in the third quarter of this year, and that should clear them through the 1 million ounce threshold, because the market wants to see your project has million ounce plus potential. So this one, at the current gold price, this story, this emerging district is happening. It is the kind of thing that you can buy now, and again, not worry if gold's going to go down $100 or $200 or praying that it goes to $2,000 to make this thing worthwhile. This is a story that you can buy right now, regardless of what gold does.
Yeah, and I see, for example, 47 meters of 10.6 grams was the headline number in today's press release. Very impressive, but it's the scale of this thing, isn't it, John? I mean, you see this as very, very large structures, and the scale.
The news releases themselves, they got the flashy numbers and all that, but the market's become kind of used to this. So this is one where paying attention to the news releases isn't that important unless something new and different shows up, such as they take this thing deeper and come up with bigger numbers. This is one of just waiting for them to do the job, deliver that resource estimate, and if gold does start trending higher, well, as you mentioned earlier, that's icing on the cake. That will bring new audiences into this sector, because we are still starved for an audience, even for gold. So that's why I like ones like that. They got the ounces in the ground already. They're building them through critical mass, and it's got the grade that says, well, you don't need a higher gold price, but if you get a higher gold price, well, that just makes it so much the better.
Yeah, no doubt about it. Well, those are 2 great ideas, John. I want to thank you very much for spending a bit of time with us today. We'll have to pick your brain for some more in the future. You certainly do come up with some novel ideas, too. Very interesting, and, of course, that's what makes your work valuable, doing what other people don't necessarily see.